The Bitcoin quantum threat debate is reaching a fever pitch. On one side, voices saying this is the story behind Bitcoin's recent underperformance, that Satoshi's coins are at risk, that developers are asleep, that corporate money will eventually force a takeover just to fix it. On the other side, engineers and cypherpunks saying this is fear, noise, and bad math, that the threat is decades away if it ever materializes at all. Both camps have serious people. Both have blind spots. Today, we cut through the noise, one of the most technical and fiercely debated questions in Bitcoin, and we find the actual grounded truth. Welcome to No Second Best, the show where conviction meets reality and reality points straight to Bitcoin. I'm your host, Hurley. Now let's get into it. The quantum computing narrative is real, it's loud, and it's affecting how new and existing money thinks about Bitcoin. That deserves a real answer, not dismissal and not panic. So let's build it from the ground up. Let's start with what's actually happening. Quantum computing as a concept has been around for decades, but recently something shifted. Google, IBM, and Microsoft started making real hardware announcements. New chip architectures started showing up in labs. And the word qubit went from a physics term to a financial risk factor. Some prominent voices started sounding the alarm. The argument? Quantum computers, when powerful enough, could theoretically reverse the math that protects Bitcoin wallets. That it could find the private key from the public key and drain your funds. One of the loudest voices pushing this concern has been Nick Carter, co-founder of Coinmetrics and partner at Castle Island Ventures. Carter published a series of pieces calling quantum computing Bitcoin's biggest long-term risk, estimating a capable quantum computer could arrive as early as 2028. Now, for a little context, Carter's firm has invested in a quantum defense startup. Some in the space have questioned whether that shapes his timeline estimates. That's just some context worth knowing. On the other side of the debate, Adam Back, Blockstream CEO and one of the original cypherpunks, publicly called Carter's position uninformed noise. Back estimates the real threat is 20 to 40 years out and says Bitcoin developers are already quietly working on the problem. On-chain analyst Willy Woo posted this chart recently, Bitcoin's 12-year valuation trend relative to gold, and argued that quantum concerns are at least partially behind Bitcoin's recent relative underperformance, specifically its underperformance against gold, its debasement trade opponent. Woo is a serious analyst who I respect, but attributing a trend break to quantum fear is his interpretation, not an established fact. There are significant macro forces in play right now. What we can say is that the quantum narrative is affecting sentiment, and that it deserves a careful, honest answer. On a recent podcast appearance, Nick Carter made another core argument that isn't only that quantum will break Bitcoin, it's that Bitcoin developers are moving too slowly, and that institutional money won't wait forever. Carter believes a quantum-capable computer could break Bitcoin's elliptic curve cryptography within this decade. He calls it no longer a physics problem, just an engineering one. And he says the developers who should be addressing it are largely ignoring it. But the most provocative part of his argument isn't the technical concern, it's what he says happens next if nothing changes.
Well, I'll tell you what I think is going to happen, and I don't want to scare anyone. I think the devs will probably continue to do nothing. They say that there's some stuff happening, there's not a lot. And I think the big institutions that now exist in Bitcoin, they didn't before, they didn't in the 2x scaling wars debate. There were basically no institutions. They will get fed up and they will, if for lack of a better word, fire the devs and put in new devs. If you're BlackRock and you have billions of dollars of client assets in this thing and the problem's not being addressed, what choice do you have? So I think this, if unaddressed by the devs organically, would lead to a corporate takeover, a successful one.
What Carter is describing here has nothing to do with physics. It's a power dynamic. If BlackRock, Fidelity, and Strategy collectively hold enough of Bitcoin's economic weight, and they decide the quantum question demands urgency, they then have leverage to change who builds Bitcoin. Here's what's worth noticing though. Look at where institutional money has moved during this drawdown. ETF flows have stayed strong even through this recent 45% dip. The money that's predominantly left has been retail and crypto native traders, not the institutions Nick Carter says are getting fed up. And yet, the fact that institutional holders are sitting on tens of billions in Bitcoin-linked assets means the governance question Carter raises is still worth taking seriously. Michael Saylor recently announced that Strategy, the company that holds more Bitcoin than anyone else on Earth, is launching a formal Bitcoin security program with quantum computing specifically cited. Saylor's position is that Bitcoin is upgradable. It will be upgraded, and Strategy will help lead that initiative. Just think about the game theory for a moment. The entities most financially exposed to a quantum compromise are also the ones most incentivized to prevent it. BlackRock has billions in client Bitcoin assets. Strategy holds over 700,000 Bitcoin. These players are not going to watch a known threat materialize without acting. This is actually an argument for Bitcoin's resilience. When the stakes are this high, the incentives to protect the network are enormous. The corporations Nick Carter warns could take over Bitcoin are simultaneously the corporations most motivated to keep Bitcoin exactly as secure as it's always been. But all of this still leaves the core question. What is the actual engineering reality? How close is quantum computing to being a real threat? Let's build that picture carefully. Bitcoin uses two different types of cryptography. They face completely different threat levels. Most coverage treats them as one thing. That's the first error. The first is SHA-256. That's the hashing algorithm behind Bitcoin's mining and transaction verification. A quantum algorithm called Grover's algorithm could theoretically speed up attacks on SHA-256, but it would only reduce SHA-256 effective security by half. Bitcoin can simply double its key size to respond. This is manageable. The second, and this is where the legitimate concern lives, is elliptic curve cryptography, or ECDSA. This is what links your public key to your private key. Your wallet's security rests on it being essentially impossible to reverse that relationship. An algorithm called Shor's algorithm, if running on a powerful enough quantum computer, could theoretically do exactly that. Take your public key, drive your private key, and drain your wallet. But here's the critical nuance that almost nobody covers. Brandon Black is a software engineer that spent 8 years in Bitcoin development. He launched the first Taproot multisig wallet and the first MuSig2 implementation in production. He's been a technically precise public voice on what a quantum attack on Bitcoin would actually require. Here's how he breaks down what's actually at risk on a recent episode of What Bitcoin Did.
Yeah, so the relevant thing, as I mentioned earlier, is Shor's algorithm. And Shor's algorithm would enable a quantum attacker with a cryptographically relevant quantum computer to take our public keys and turn them into secret keys. And if they could do that, of course, then they could spend anyone's Bitcoin. And so that's the threat. And so we don't know exactly how that would play out because it's very hard to game out. Let's say you are the first person that develops a cryptographically relevant quantum computer. What are you going to do first? Are you going to go for Satoshi's coins? Are you going to try and hack into North Korea? Are you going to try to hack into Russia? Are you going to try to hack into the US government? Like, what's the first target if you get that device? And it's very hard to know because there's different game theoretical reason to do each of those things. You know, a certain entity might find just kind of slowly siphoning Bitcoin away to be the best use of that device. But another entity with the exact same device might think that infiltrating the president of, I don't know, the Ukraine even might be their first target. Like we just don't know. And so I don't know what happened first. What I do know is that Bitcoin's public keys would become vulnerable to such a device. And this is where we get into then this like long exposure versus short exposure that everyone likes to talk about. And so if you are someone whose public keys are just as secret as your secret keys, meaning you've never reused an address, you've never exposed your xpub, you've never exposed your descriptor, you've not used a taproot address or a pay to pub key address, you've only used addresses ending in H, as Hunter likes to call them, and you've been absolutely perfect about your key discipline. Your public keys are as secret as your secret keys. The quantum attacker cannot steal your Bitcoin at rest because your public keys are not known. And the only thing that a quantum computer is likely to be able to do when it's first developed, a relevant quantum computer, is to reverse public keys into secret keys.
This is the detail most coverage gets completely wrong. Not all Bitcoin is equally exposed. If you've never reused an address or never exposed your extended public key, if your discipline has been solid, your Bitcoin at rest is already effectively safe to a quantum attacker under current conditions. Satoshi's early wallets with public key permanently visible on the blockchain are in the most exposed category. Reused addresses are exposed, but well-managed modern wallets with proper address hygiene are far less vulnerable than the headlines imply. The specific threat is real. The universal threat is not. Now the bigger question, how close is the technology that would make any of this possible? To run Shor's algorithm against Bitcoin elliptic curve cryptography at practical attack speed, say within the 10-minute window a transaction sits on the mempool, you would need millions of error-corrected logical qubits. CoinShares published a research note in early 2026 estimating that breaking a Bitcoin key within a single day would require on the order of 13 million physical qubits. Today's most advanced quantum machines have approximately 1,000 noisy physical qubits. That is a gap of 5 orders of magnitude, not a software problem, not a funding problem, but a physics problem. Here's Brandon Black on why and why every major lab keeps hitting the same wall.
So what I observe, and I think many others have made the same observations, I'm not alone on this, is that the basic properties of qubits are pretty well understood at this point. we can produce some qubits, we can map some state onto them, and we can resolve them into a desired state that we want to measure. And that enables factoring very small numbers, because if you can get a couple of qubits together, you can factor a small number using a quantum computer. And so what the quantum researchers have been doing over the last decade has been trying to make that scale to larger numbers of qubits. And that turns out to be very, very difficult. And so we've seen hundreds of millions or billions of dollars poured into trying to get that to scale. And what seems to happen is that as you increase the number of qubits you're working with, the difficulty of correcting the errors in the qubits goes up exponentially. And so every time they come up with new technologies that seem to have lower error rates, and they've gotten much, much lower error rates on their individual qubits, but when they start trying to put more qubits together, they keep on seeing that the error rates rise exponentially as they go to more and more qubits. And so this is something we saw very clearly with the recent Microsoft Majorana announcement, where they have built a very cool, very low error rate single qubit device. And so this is like, oh, we can manufacture lots of these single qubit devices, and that's very cool. And maybe there are applications for those. But what they haven't demonstrated with all of these new announcements that have been made is no one has been able to demonstrate the ability to tie a whole bunch of qubits together on a single device and not have the error rates go up exponentially. And so that's how we got to this state where they did this thing many years ago, and it hasn't really advanced. The closest to an advancement we've seen was someone used a quantum computing device to solve a 6-bit elliptic curve key. Now, 6 bits is ever so slightly larger than 21, but it's still like, I joked that literally a child can solve a 6-bit elliptic curve key. It's not something that requires great computing power.
What Brandon is describing is the fundamental obstacle. You can build an excellent single qubit device, but when you try to connect many qubits together, the error rates compound exponentially. Every approach researchers have tried eventually runs into this. The claim that Bitcoin will be quantum vulnerable in 2028 or 2033 requires assuming quantum computing will scale in ways we have never observed. That's not engineering analysis, that's projection. Now, what would it actually take to change this picture? The reason quantum FUD gains traction with serious investors is because serious investors take long-term risk management seriously. That instinct is exactly right. The people thinking hardest about this are asking the full picture of questions, not just quantum, but custody, inheritance, tax structure, and whether their Bitcoin strategy is built to last decades. And that's exactly what Swan Private is built for families, individuals, and businesses holding meaningful Bitcoin. Swan Private brings together custody, estate planning, Bitcoin-only guidance, and tax-aware structuring under one roof. It's built for serious long-term conviction holders who want every piece handled with care. To learn more about Swan Private, visit swan.com/nosecondbest. Now back to the engineering, because the last piece of this technical picture is the most important. Here's what separates honest analysis from fear-driven coverage. A clear, falsifiable standard for when the concern should actually escalate. Brandon Black gives one of the most precise answers I've heard to this question.
There's a very clear evidentiary standard here. And as soon as that evidentiary standard is met, we have to start doing stuff. But as of right now, no one has gone from reversing a 6-bit EC key to a 10-bit EC key using sub-exponential increases in time and energy. And until there's a sub-exponential increase in the difficulty of doing that, we still have the exact security model we've always promised with elliptic curves, which is that it is exponentially difficult to break elliptic curve keys of a certain size. And as long as it's scaling exponentially with energy input, we still have that. So it's very easy to change my mind. The evidence it can be just put out. Hey, look, someone made a quantum device that for a 6-bit key takes X energy, and for a 12-bit key takes Y energy, and that's sub-exponential scaling. Oh, okay, we got to do something.
That's what intellectual honesty sounds like. Not quantum is impossible, and not panic now, but a clear, falsifiable standard. The moment a lab demonstrates sub-exponential scaling, where factoring large keys takes disproportionately less energy than the math predicts, that's the signal. It's binary, it's observable, and only once it happens does everything change. Until that evidence exists, the security model holds. The math on which Bitcoin's cryptography rests says it scales exponentially with key size. Every observation to date confirms that model. Watch for the signal. And as of right now, it hasn't appeared. It's important to remember that Bitcoin is not static. It has upgraded before. SegWit, Taproot, MuSig2, all significant changes to how Bitcoin operates, all moving slowly and deliberately through broad consensus. That deliberateness is a feature. It's what protects the network from being captured by any single actor. But that same deliberateness means a response to quantum cannot wait until the threat is confirmed. A full cryptographic migration could take 5 years or more. If a credible engineering breakthrough emerges in 10 years, the preparation window is tight. Post-quantum cryptography already exists. BIP 360, a Bitcoin improvement proposal specifically for quantum-resistant address formats, is already in active discussion. The tools are there. What's needed is the deliberate, community-driven governance process to implement them, starting now, well before any imminent threat, exactly the way serious long-term systems prepare. Now, before we close, I want to take one step outside the engineering entirely. Preston Pish runs the Bitcoin Fundamentals podcast, and he recently sat down with Jeff Booth, the author of The Price of Tomorrow, and Jack and Nick, who came on to present a paper they've been working on. The paper's premise is that Bitcoin's block structure, the way the network records transactions in discrete sequential steps, may actually tell us something fundamental about the nature of time, energy, and entropy itself. That Bitcoin isn't just a financial system, it's a physical process. And understanding it as such changes how we think about what quantum computing can and cannot do.
Because everyone is talking about like quantum as this inevitable thing that Bitcoin must bend the knee to, but Bitcoin actually is proving quite the opposite to our lens. And so the reason why it's binary is because the ontology of time matters. Like you can't double spend what is true about time. It's either quantized, discrete, and indivisible at some level, or it's continuous and infinitely divisible. It can't be both.
But we have, just to push back a little bit on this idea. So we do have quantum computers that already exist. They're, microscopic in scale with respect to the number of qubits that they can perform at, right? Like I think from a logical qubit standpoint, we're like less than 30.
I think it's under 15, right?
Maybe even under 15, but it does exist. Would this be almost like a block reorder? I'm trying to think of the parallel in Bitcoin that would allow something like that to exist in a very small scale, but then never scale to a higher level. Would it be like a block reorg of time, that the parallel blocks were being found and then they get reorged and get definitized, so you could never like have something that has, I'm just spitballing here. I have no idea.
Preston, can I just jump in? Because I think we all might be crazy people in the same thing, right? But exploring this as part of the so my layman's version of that is you have all these probability states, and if you develop a logical qubit, then these probability states at the tiniest increment of time aren't actually coexisting. And as you expand the probability states, you get errors and errors on the other side. Mm-hmm. And so now you're building all of these error correction into the thing because you can't at the smallest, and they think in it, and you believe it can exist because you're not measuring time.
Yeah, right? Like we are not measuring time. We are approximating time. That is the distinction.
Yeah. So I would say it's not saying that like what they're observing is invalid. Well, they're observing something, right? And I think it's really what they perceive they're observing is different from what is actually occurring. Like they think something is happening, but fundamentally something else is happening. And it all depends on the ontology of time. And so I was saying it's Bitcoin or it's quantum. It can't be both. And what do I really mean by that? It's like when you ask the question, like if time is quantized and discrete, how do these models change? Like what changes? I don't want to go deep into the formalism because that's kind of getting outside of my domain of expertise here. But simply put, for like the listener, you can't take the derivative of, say, Schrodinger's equation if time is an integer. If at some level it's indivisible, then you can't take the derivative. And so the entire formalism would need to be reorganized to this change in time. And so like that is a whole different domain of physics. Like we're seeing a fracture in physics itself where there's the people who are appended to the continuous time and they're trying to make it work and they keep hitting dead ends. And so like if time is really quantized and discrete, it's like they're continuing to work on the sinking ship. It's a sunken cost that they can't fix. Like the problem is the assumption, it's not what they're doing. And so you do have like other domains of physics where like, say, we brought up Stephen Wolfram, like he is approaching physics from the other side, which is the discrete nature. But we need to look at like what actually changes when time is discretized. And so very simply put, like what is superposition or decoherence in a discrete time model? And so Bitcoin gives us that lens of what superposition actually is. It gives us an understanding of what physicists are actually observing when they call superposition, and that would be the mempool. It's a pre-configured state of possibility, but it doesn't actually exist until it's measured. And this is like in the language of physics itself. They know like this is the pre-measured state, and when it's observed, it becomes measured and deterministic, but they don't have the process of how this goes from superimposed to classical. And so this isn't a substrate to actually compute on. It's a potential state. It's not a computable state. And so when time is discretized, the meaning of superposition changes because it is pre-time. And then when you're looking at decoherence, decoherence is the natural process of the measurement itself. And so it's like these words are all inverted. Like Bitcoin is actually saying no, like what physicists call as decoherence is actually really coherence. It's reality cohering to a single chain of events. They think this is a problem that you must engineer away. Like we need to maintain these superimposed states so that we can perform this computation. And oh no, like it keeps decohering to these classical states. It's like without that decoherence mechanism, like you don't have an objective reality. And so Bitcoin is simply just saying like, no, this is the process of time occurring, and they don't actually understand what they're looking at.
Now, if your head hurts as much as mine did after watching that, let me help simplify what they're getting at. Quantum computing gets its power from something called superposition, the idea that a quantum bit can exist in multiple states at the same time, until you actually look at it. That's the magic. Hold enough of those bits in that in-between state, run your calculations, and when you finally measure the result, you've effectively done an enormous number of computations in parallel. But there's a persistent problem every quantum lab runs into. Those superposed states keep collapsing on their own, constantly before their computation is finished. The quantum system decoheres. It snaps back into ordinary, definite reality. Researchers treat this as an engineering bug, something to be suppressed, corrected for, or engineered away. What Jack and Jeff Booth are suggesting is that decoherence isn't a bug. It's reality doing exactly what reality is supposed to do. If the universe moves forward in discrete steps, if time is granular at its most fundamental level, the way Bitcoin blocks are, then a quantum bit collapsing into a single definite state isn't a malfunction. That's just time ticking forward. You can't hold something in superposition across a tick of time that doesn't exist in between. If that's true, the ceiling on quantum computing isn't set by engineering, it's set by physics itself. Now, this isn't settled science, but it's a serious question that's fun to think about. And it's something that almost nobody in the quantum hype cycle is willing to engage. I highly recommend checking out the full conversation on this because it's mind-blowing. I'll leave a link in the description to this and all long-form conversations from this episode. Quick note before we close. If you're serious about Bitcoin, not the noise, not the cycles, but the actual signal, BitBlock Boom is worth your time. April 8th through 12th, Bitcoin only, no noise. Corey Clipston, Brady Swenson, and the Swan private team will be there. BitBlock Boom is a smaller conference with serious Bitcoiners. Exactly the kind of room where conversations like this actually happen in person. Check out bitblockboom.com for a list of speakers and use discount code SWAN for tickets. Okay, now let's land this plane. Quantum computing is real. A computer powerful enough to run Shor's algorithm at scale could theoretically reverse exposed public keys and access vulnerable wallets. But that threat is not imminent. The gap between current quantum hardware and what would actually be required is 5 orders of magnitude. The error rate scaling problem that every major lab keeps hitting is not a funding gap, it's a physics problem. The claim that Bitcoin faces a quantum threat by 2028 or 2023 is not grounded in engineered observation. It is a projection built on assumptions about exponential quantum scaling that have no historical basis. What is grounded in observation? Bitcoin's security model remains intact. Elliptic curve cryptography has not been broken. No lab has demonstrated sub-exponential scaling and key factoring. The evidentiary standard Brandon Black outlined is clear. When that evidence appears, the conversation changes. It hasn't appeared. What's also grounded in reality? Bitcoin needs to begin its post-quantum upgrade process before a threat becomes imminent, not after. The tools today exist. Post-quantum standards are finalized. BIP 360 is in discussion. The deliberate process of community-driven consensus is exactly how Bitcoin is supposed to evolve. Willy Woo and Nick Carter are right that developers need more urgency on the question. Adam Back and Brandon Black are right that the current threat level is being wildly exaggerated. The rational position holds the tension between those truths and acts accordingly. The entities most exposed to a quantum threat are the same entities most motivated to prevent one. Strategy, BlackRock, Fidelity, their financial survival depends on Bitcoin security. That incentive structure is one of Bitcoin's most underappreciated defenses. Bitcoin has outlasted hundreds of claimed existential threats. Not because it's immune to all threats, but because the network is built to adapt. The incentives align towards its survival, and the people working on it are serious. And this one is no different. That's where we are with the quantum question. Real concern, real engineering realities, real timeline for preparation, and absolutely no reason for panic. Now, I'd love to hear from you on this. Do you think Bitcoin developers are moving fast enough on quantum resistance? And if it takes institutional pressure to accelerate that process, is that a failure of Bitcoin's decentralization, or is it the network working exactly as designed? Has the quantum narrative changed your thinking on Bitcoin? Are you holding, adjusting your strategy, or watching and waiting? Let's discuss in the comments below. If this episode gave you clarity on a topic that's been generating more heat than light, please like it and share it. Every share puts it in front of someone who needs to hear it. And if you haven't already, subscribe to the Swan Bitcoin YouTube channel so you don't miss the next deep dive for truth. Thanks for watching, and remember, in the game of money, there is no second best.